Right, understanding credit cards. We have 4 pages of notes to get through, so let's get started. What is a credit card? You've got a definition right there. Credit card is just a plastic card that you can use to access a line of credit that has been established in advance. You can borrow up to your credit limit, and that's whatever the credit card company has decided they are willing to allow you to spend. And that does change. As you use your credit card wisely, they will extend that limit and move it up either in increments of maybe 500, thousand, couple thousand. I mean, it can go up quite high. But first you start out with a small amount, and that's going to help you to establish a good pattern of using credit before you get yourself into too much trouble. And a credit card is obviously open-end credit because you have a revolving process. You pay it off, you charge, you pay it off, you charge, and it just never stops. It's never closed unless you close it on purpose. Next, credit. The cost of credit is expressed as interest. That is down here. A yearly interest rate called the annual percentage rate, or APR. Your interest will be charged every month on your bill for any amount that you don't pay in full. I'm sorry about that. Okay, minimum payment definition right here. That is going to be the smallest amount that you can pay in order to keep the account current and not be charged any late fees. So here's an example real quick of Miranda, who purchased a new computer and textbooks totaling $1,500. And we're looking at 3 different scenarios here. On the first one at the bottom, if she makes just the minimum payment, this is what's going to show up on her bill. Credit card company says you must pay at least $30. If she only does that and she does it every month, it will take her 11 years to pay off that credit card. In the end, she will be paying $1,400 just in interest. So that laptop and books that should have been worth $1,500, she's going to end up spending $2,900 on those items over the course of time. So that is why making only the minimum payment is not a good long-term situation. However, maybe she says, I'm going to make more than the minimum payment, but I can't pay it all off in the first month. I'm going to stretch this out over a year and just try to get it paid off in a year. She's going to pay $135 a month. And yes, she's going to end up paying some amount of interest, $125, but it's not nearly as bad as the other option. And then best case scenario, she makes the full payment of $1,500, pays it off in the first month, has no interest, and ends up only paying $1,500. So obviously, best scenario. Second best scenario, don't get into this one right here. Moving on. I'm going to move on from that one. Okay, positive credit history. Develop a positive credit history with your credit card. Here are 4 positive credit behaviors. So pay your credit card balance in full every month if possible. Pay your credit card bills on time, definitely. Check the monthly credit card statements for errors so that you are not getting charged for any fraud that might have happened on your account. And be conscious of how credit cards affect your credit history. Make sure that you're not maxing out your credit limit. Make sure you're leaving some available credit, and make sure you're paying on time. Those are the most important things. Credit cards can be a convenient payment tool. Here are 3 ways, which is on your note-taking guide. It allows you to not have to carry around lots of cash. It is useful in emergencies, and often it is required to hold a reservation, like for a hotel or airline ticket or some other things like that require like a deposit. But you want to make sure that you are not overspending when using a credit card. So a lot of people disassociate you swiping that card or inserting the card or whatever with actually spending money. They know it's not coming immediately out of their bank account. They don't have to worry about their checkbook balance. They know they're spending future money. That's future me's problem. but that's what can get you in lots of trouble. So you want to be very careful with how you're spending on your credit card. Next, credit cards can protect you from unauthorized charges. If you lose your credit card, you want to make sure that you report it immediately before it gets used fraudulently. If you've lost it, chances are somebody else has found it and they might go spend some money. So you want to report it lost before that happens. If you do that, you're not going to be liable for any charges that might happen from your credit card. And if they use your number, like they've stolen your number from another website or something like that, you're not going to be liable for any of those charges. But if it's just an unauthorized use, you haven't reported it, and it was the actual card used and not just the number, you might be liable for up to $50 of the charges, but no more. So that's awesome. Why should you check your statements monthly? And that is to make sure that there were no fraudulent charges. I've had that happen to me a couple of times. It happens fairly frequently. You have to end up getting a new credit card number. It's not a big deal, but you definitely don't want to be paying for some other person's charges, right? And not even know it. Okay, safer online shopping. Safer than debit cards because you have more protection against fraud. The money is not connected to your bank account or anything else that is your personal stuff. And there's going to be less liability for unauthorized credit card charges. So basically, if you use your debit card online, yes, it's safe for the most part. But if something happens, someone steals your number, they have now access to your bank account, and then they're going to overspend, go over the limit, and you're going to end up with overdraft fees and possibly some really sticky situations if someone is taking all the money out of your bank account. Whereas if they're just charging it onto a credit card, that's not real money yet, and so it is safer in that way. Just know that it's safer. So if you have both, choose to use a credit card online. All right. Nope, this is not even on your notes, but point of sale, which means at the checkout, at the cash register, should you do debit or credit? Not really a best choice here, but a pro to using your debit card is that you do have that option to withdraw cash, get extra cash if you need it. If you pick credit, it could give you extra liability protection from any fraudulent charges. So again, not a definite right or wrong answer there. Additional benefits, rewards. So if you get a rewards card of some sort, it's going to give you cash back or airline miles or whatever it is, discounts. Those are great, but make sure that you're not getting charged for them. So there might be some additional fees associated. Maybe you have an annual fee just to have the credit card, or there might be higher interest rates for all the purchases you make. So just make sure that you're evaluating the benefits and making sure that the benefits do outweigh the costs. Okay. Advantages and disadvantages of credit cards. So these are right here. I'm not going to read every single one of them, but mostly it's all the things that we've already talked about. There are lots of advantages to having a credit card, but you have to do it right for those advantages to even be there. You have to manage it responsibly and not get yourself into a mess. Negatives, interest. Almost every credit card is going to charge you interest if you carry a balance from one month to the next. And that can be really costly if you don't pay the credit card off for months or years, if you always carry a balance, and it just makes you stressed out. There also could be extra fees that you weren't planning for, and definitely temptation to overspend. It doesn't feel like real money, and so you might spend 30% more because you have a credit card versus using a debit card. It's also going to negatively impact your credit score if you don't use it responsibly. All right, credit card issuers are going to send you this big, long technical thing called a Schumer box to talk about all of their particulars. Okay, you're not going to want to read that thing because it looks awful, but you have to. You have to look at it and you have to compare it to other credit card offers and their Schumer boxes so that you know what you're getting into and you know which credit card is actually the best deal for you. So comparing credit card offers is the reason the Schumer box is important. So here we're going to look at some things that are on the Schumer box and fill out all the little things on page 3. Annual percentage rate, the APR for purchases. This is just the interest rate that you're paying for purchases. So that's not the only thing that they're going to charge interest for, but that's what they're going to charge for interest. So that's listed right here on our example. The APR for balance transfers. That's the, oh, no, sorry, we're going to talk about this for one more slide. The introductory rate is something that is your, obviously, your introductory rate when you first get the credit card, and it might last for maybe a year, or it might last for until you do something wrong. That's going to be specified, and your introductory rate is also dependent on your credit score and what's on your credit report. So the better your credit score, the lower interest rate they might give you as an introductory APR. Not all credit cards have an introductory APR. Some of them are just, here's the interest rate. Also, fixed versus, I feel like I went backwards, sorry. Fixed versus variable rate APR. So a fixed rate is an interest rate that never changes. And a variable rate is an interest rate that changes based on some factors. Maybe after a certain amount of time, it changes. Maybe if you, maybe based on the market. And so obviously you would want a fixed rate if possible, because that means it's predictable and it's not going to go up. So that's important. Okay, balance transfers and cash advances. Those are the next two blanks. Balance transfer is when you transfer the balance of one credit card onto a new credit card. It's actually not a good idea. It's better to just pay both, maybe get one paid off, and then just leave it alone, but leave it open. When you close credit card accounts, sometimes that negatively affects your credit score. And a cash advance is when you actually withdraw cash from your credit card like you would an ATM or a debit card. But they're going to charge you some different APRs for those services. So those are going to be listed as well. Penalty APR. This is an interest rate that's charged on any transactions from this point forward if the penalty terms are triggered. What could trigger a penalty APR? Things like making a late payment, going over your credit limit, making a payment that's returned. You didn't actually have the funds in your checking account to pay that payment. Or if you do it on another account that you have with them. If you have two credit cards with the same company, you do something wrong on one, you get penalized on both. How to avoid paying interest on purchases. You want to pay the bill in full by the due date each month, but there might be a minimum interest charge, and that's typically 50 cents to $2 per month. So if you don't pay it off, they were going to charge you all these interest rates that they've told you about, but even if you do pay it off that first month, they still might charge you just a little bit for the heck of it, because they can. All right, and the last in the top box about interest rates and interest charges says for credit card tips from the CFPB, and that stands for Consumer Financial Protection Bureau, and you are to list this website right there. And that's where you can look if you have questions on managing your credit or your credit cards. Then we're going to move on to fees. So setup and maintenance fees, those might include an annual fee, meaning once a year you have a fee for just having the credit card, a setup fee. So just at the very beginning, they're going to charge you a fee for setting it up, a participation fee, and that's going to be more like a monthly fee, or additional card fee if you and your spouse or you and your mom or your child or whoever has cards on the same account. Now, not all of these are going to be on every credit card, but you want to be aware of them so that you can compare two types of cards. Transaction fees are the next type of fees. So this happens anytime there's a transaction, such as a balance transfer or cash advances, mostly. And then, one thing I wanted to mention there, foreign transactions. So in case you ever decide to go to Canada or somewhere else out of the country, and you use your credit card in those other countries, some credit cards are going to charge you an extra fee. And this one says 2%. Mine charges 3% of all charges. And I didn't know that until I charged out of the country one time. So we've got penalty fees. So that's going to include your late payment fees, over the limit fees, and returned payment fees. And I think we already kind of discussed those. So pause as needed, guys. How we calculate your balance. So that's the second to the last blank on the bottom of page 3. They're going to tell you what method they use to calculate your balance. And so just know it's going to be on there. And then the last blank is talking about the loss of introductory APR. So if you have an introductory APR, they're going to tell you now how you could lose the introductory APR. Maybe if you are, this one says if you're 60 days late in paying your bill, maybe it's just after a year is over, or whatever. It's going to be on there. Okay, last page. Okay, how do you obtain a credit card? You're going to shop around, compare credit card offers from different companies, and determine which one best suits your needs. Complete a credit card application, and then after you are approved, you will want to review those terms closely and make sure that there are no surprises. Credit card companies do send pre-approved credit card applications in the mail sometimes when you have passed an initial credit check. So maybe you applied for a credit card somewhere or someone else pulled your credit for whatever reason. And then it's like it starts a tidal wave of credit cards sending you these things in the mail. And that doesn't mean that you need the credit card. You still want to do your research. You still want to make sure that you are actually ready to open a credit card before you move forward. If you're under 21, you can get a credit card in a couple of ways. You can have a co-signer, someone who's over 21 who's going to join with you on that account and be equally responsible. So maybe that person already has some credit established and they can get approved, but you can't yet. Or you might be able to provide some evidence that you can pay for that credit card. So showing pay stubs or tax information showing that you have been receiving income for a certain amount of time. That can also help. And just know that whenever you get a cosigner and you make a mistake, it's going to affect that person as well. The credit card statement is going to come in the mail every month, and it is important to review it and look it over closely. Why? You want to check for errors mostly. You want to see if someone's stolen your credit card number and you didn't even know about it until you see that there's some crazy, fitness center in North Carolina that suddenly you're paying $300 to. Real true story. But also just to make sure that maybe you haven't been double charged accidentally or things like that. So we're going to look at Andrew's credit card statement and answer the last few blanks here. And I apologize ahead of time, but it takes me several clicks to get through these slides. So first of all, doesn't this look fun? Summary of account activity. This is just going to summarize all of the major things that happened, all the totals from the month. So all total payments, total purchases, total balance transfers, cash advances, fees, interest, and then the most important part, your new balance. It's also going to list your credit limit on there. This person's credit limit is $2,000, so they have still $214 of available credit they can still spend if they choose to. And how much did Andrew charge in new purchases? He charged $517 in purchases this month. Payment information, the next part, it's going to tell you your total new balance. Here's a close-up. Your new balance, $1,786. Your minimum payment due, in this case, $53 he has to pay this month in order to not get any penalties. And the due date. Late payment warning. Now, what is Andrew's minimum payment? $53 he has to pay. Oh, sorry. Late payment warning, also going to be on there. And the minimum payment warning. So the late payment warning says, if we do not receive your minimum payment by the date listed above, you may have to pay a $35 fee and your APR may be increased up to the penalty rate of 28.99%. So they're going to tell you on there what's going to happen. It's up to you to know that and to not pay it late. And then the minimum payment warning is going to give you an estimate of how long it's going to take you to pay off your balance if you only make the minimum payments every month. So this is helpful if you're just curious, if you think, hey, I'll just make the minimum payment every month, everything will be okay. So this is saying that right now, if you made $62, and I don't know why that's different than the 53, just ignore it. If you only paid $62, oh no, that's two different. Sorry, only the minimum payment, it will take you 8 years and you will pay $2,700 for that, for whatever it was that you charged that month. If you make $62, so just a little bit more every month, it will only take you 3 years. So they do spell that out for you, and it's legally they have to, but it's really for your benefit to look at that and make sure that you know that making the minimum payments every month is not a good plan. So how long will it take Andrew to pay off the balance if he only makes the minimum payment? 8 years. Notice to changes to your interest rates. So if there are going to be any interest rates that are changing, they're going to tell you here. Usually it's because you've triggered a penalty APR. Has Andrew triggered the penalty APR? Yes, he has. He's going to pay 28.99% on all transactions that he made after 4/9. And his bill was due 4/20. I don't remember seeing a date of this bill. Other changes to your account terms. So if they're going to make any changes just to the way that they are doing business, they have to tell you about it, and it can only apply to new charges. And you do have the right to close the account before the changes go into effect. So this one is listed here. Revised terms, you see right here. They're increasing their APR. And then, other than implementation of a penalty APR, are there any other changes to Andrew's account terms? We already said that. Okay. All right. Transactions is going to list all the transactions that you have made during this pay cycle and list them individually, how much they were, whatever. And then fees and interest are going to be separate. This is where you want to review for errors if you see a store name on there that you've never heard of before, or if you see duplicate charges of the same thing. Now, most of the time, your credit card company is going to check for that, and they're going to call you if they see anything weird. But maybe it's something that wasn't that weird, and if you don't catch it, nobody will. Fees and interest charged are going to be listed separately. I already said that. And then, whoops. And you can see that Andrew owes a $35 late fee this month. Year-to-date totals are also going to be listed on there. So here's a zoom in. We had all of our charges, and then our year-to-date totals are down here. Total fees, total interest. And that kind of can be a wake-up call sometimes if you see a whole lot of interest charges. You're like, wait a second, this is just money that I'm spending for no reason at all. It wasn't even part of the cost of the item. I'm just charging it because I'm using my future money, and you might want to reevaluate your life at that point. What's the total amount of interest Andrew has paid in the year 2019? $1,874. And then finally, the interest charge calculation. So that's going to be a summary of the different types of transactions. Got it down here. And so for purchases, it's going to say, or for cash advances, balance transfers, it's going to list the APR, how much of your current balance was charged that interest rate, and then how much actual interest are you accumulating in this bill cycle. So moving on. I'm not even going to go there. Okay, you guys did great. See ya.